The Russian rouble has been on a slide this week. It opened on Monday at about 43 to the US dollar. You could have got 48 briefly today before it recovered a bit. What's behind it? The central bank seems to have walked away. It spent $30 billion to profit up $30 billion last month. On Wednesday, it said it would no longer do that. Here to discuss what's going on is Neil Buckley, our Eastern European editor. Neil, thanks for joining us. What is happening?
Well, as you said, the Russian central bank had spent about $30 billion propping up the ruble, but failing to stem the slide, which is very much connected with the slide we've seen in oil prices in recent weeks. On Wednesday, they signalled they would limit their interventions to $350 million a day. Remember, they were going to shift to essentially a free float or inflation targeting early next year anyway, so they kind of brought that move forward. But that's very much increased the pressure on the ruble, possibly speculative pressure in the last 2 days and today.
And they also raised rates last week, didn't they, briefly? That doesn't seem to have had any effect either.
No, indeed. They raised rates 150 basis points to 9%, which is very tough for the economy as a whole when you have a problem with very low investment already in the Russian economy, exacerbated by things like sanctions. So I think the idea was to move to a floating rate a little de facto, a little quicker than was planned. But what we're finding is that investors don't really know where the floor is now on the ruble, and that's putting a lot of pressure on.
Let's just look. We've got a chart here showing what's happened this year, and you can see there's a slight uptick because there were rumours today apparently that the central bank may be about to act. If we can go to the next chart, we can see what's happened over the past 20 years. And there have been movements like this before. There was the famous Russian crisis, one of the big emerging markets events of the late 80s, and late 90s rather, 2008 with the global crisis, and again today. Does the government's reaction in the past tell us anything about what it might be able to do now?
Well, in 1998, Russia was essentially bankrupt. Debts way outweighed its foreign reserves. The central bank was not particularly known for its competence then, so that's a very different situation. 2008 it came against a background of the falling oil price, the global economic recession after the fall of the bankruptcy of Lehman Brothers. Then Russia spent more than $150 billion of its reserves, slowing the decline. This time, it's decided not to burn through that amount of money.
Right, okay, and let's have a look at something that may be behind all this. What we can see here in the blue lines is Russian GDP growth, which has been slowing for the past 5 years. There's the oil price, comfortably above $100 a barrel for most of that time. Now it's fallen. Is this what's going on? Is it worries over Ukraine? What's got people most upset?
You put your finger on it, really. The oil price is the backdrop, but the rate has fallen by more than is really justified by the economic fundamentals and the fall in the oil price. And so it's the uncertainty, it's the negative sentiment towards Russia, it's the sanctions which are undoubtedly biting, having an impact on the economy. It's that extra element of sentiment, concern, fear, negativity, as a result of what's happening geopolitically, as a result of what's happening in Ukraine, where we've seen increased tensions in recent days. And that's what is the real difference between this and the previous crises and makes this one much less predictable, or even more unpredictable.
Oh, unpredictable. Neil, great. Thank you very much indeed. Plenty to watch there, obviously, and plenty more about this on FT.com, and you can follow it at our emerging markets blog, Beyond BRICS.